And good morning. My name is Sean Wohland with the Wohland Mortgage Team, and this is today's Monday morning mortgage update. We've got a lot to go over. We've got bombing in Iran. We've just got a lot to cover. So I'm going to jump right in, and we are going to go over the first steps, which what is happening in Iran. So we see that there is we bombed the heck out of Iran's they had some nuclear sites that we bombed, and uncertainty typically helps mortgage rates. So anytime there's war, anytime we go to war, anytime there's something that shows uncertainty in the markets, people like to take their money out of the stock market or out of something that maybe is more volatile and put it somewhere more secure, like the bond market. So today we're actually seeing mortgage rates get a little bit better. We'll have to really keep an eye on this. There's some very important strategic waterways. The Strait of Hormuz is potentially going to be shut down. Now China, Europe, and the Asian continent, they get a lot of their oil that travels through there. The United States, not so much. So it's going to really have an impact on the cost of oil, and we'll have to see how that affects those countries. I'm not sure if it's going to affect the United States as much, but obviously a global impact will occur. But we'll have to really watch that carefully, because if that's inflationary, it could have an impact. But we'll see. The U.S. does not get a lot of their oil through that strait, but we'll have to keep an eye on that. So, but the war has definitely impacted rates for this a little bit slightly better, I should say. So here's where we are right now. Over the last month, we've seen since May, we had a trough here where rates were kind of bad, and then the bond market's improved. And we had one really bad day, and then we kind of gained it back. We're above the 200-day moving average right now, and we're heading towards the next Fibonacci level. That's really good news. So if we can continue to rise, and if we can go up to that Fibonacci level, we'll probably see rates in the 6 3/4. Right now we're in the high 6s, but we'll keep an eye on that really carefully. And let's look at the 10-year, because what the 10-year does, typically mortgage rates follow, they mirror them. So we see the 10-year lost quite a bit. The 10-year went down, which means rates go down. We pierced through one Fibonacci level this morning, and we've got the 200-day moving average as the next stop. And if we can pierce through that, we have a lot of room to drop all the way to 4.126. That would be a huge help to mortgage rates if we can get down there. So what's happening in the Middle East is going to be important to see what happens overall with rates as we push through the week. But here's kind of where we are on 30-year fixed. We're in the high sixes, 6.86, and down. So for the day, the rates are down. They're getting a little bit better. But look at the year over year. The high year over year so far is 7.26. So we're below that. 15-year, we're in the low sixes. 30-year FHA, we're 6.41. Jumbo's stubborn, right under 7%. And if you want to do an ARM, you may save about 1/4 to 3/8 in rate. And then VA is at the 6.42. So overall, rates are getting a little bit better today. Keep in mind that all of these rates are based on the top tier scenario: 25% down, 780 FICOs, single family detached home, primary residence. So your customers may have rates a little bit different. Here's what's happening right now in this week. So existing home sales today came out. The Case-Shiller comes out tomorrow, the price indices. We've got Fed Powell talking on Tuesday. So we'll see how what he says. Hopefully he'll be dovish. New home sales come out, and then again, more Fed Chair Powell on Wednesday. We've got an auction on Wednesday as well. Thursday, we've got durable goods. We have continuing jobless claims, initial jobless claims. We've got the GDP and some treasury bonds. Friday's the big day, the PCE, the personal consumption expenditure. That's the inflation numbers. We'll have to see how those come through. It's been a little while since these tariffs have been into play, so that could show what the tariffs are actually doing to inflation. A lot of people are expecting there to be inflation, but a lot of people don't think there will be because it's so fractional and it's put on the manufacturer, not the consumer. So we'll see. We'll see how that looks, and hopefully we'll get some good numbers there to help propel rates even lower. So Federal Reserve watch. What is happening with the Federal Reserve? Well, they did not cut the rates this last week, but there is potentially 2 additional cuts in September and October of this year that they're planning on. So current rate is 4.25 to 4.5. We expect to get to 4.5 by the end of the year. So keep your fingers crossed that they continue to do that, and we'll hopefully see lower rates continued. But here's the predictions. We have overall rates are predicted to be lower by the end of the year. Fannie Mae actually updated their prediction to be from 6.6 to 6.1 by the end of the year. The MBA anticipates rates start at 6.6 and decrease to 6.2 by the end of this year. The National Association of Realtors thinks 6.1. Realtor.com says 6.2. So as you can see, overall, everyone's trying to predict where they're at, and they're all kind of bouncing right around the 6.125, 6.2 range overall. So never going to get down to the 2s, guys. Sorry, it's not going to happen unless something massive like COVID hit again, where the world shut down and our government was forced to buy billions and billions of mortgage-backed securities monthly. That's what drove rates down. Not going to happen again. As we saw what happened, it became inflationary. And we enjoyed nice low rates for a while, but then, man, did that cause some trouble. So 6s by the end of the year, probably 6.125. Could it get below 6? Potentially, you never know. You can always buy the rate down. So that's where we are. So mortgage rates are dropping. That's a good thing. And we look forward to a hot summer, a good summer, and lower rates through the summer. So exciting about that. If you guys have any questions regarding what mortgage rates are doing, have any customers that need assistance, we are always here to help at the Wohland Mortgage team. You guys have a great day, and we'll talk to you soon.